What's going on, Nuview audience? This is Alex Sylvia, IRA specialist, here with a topic today that is a little different, something that may not make a whole lot of sense the first time you hear it. We're going to talk about what happens when an IRA becomes a taxpayer, or more importantly, why an IRA might become a taxpayer. And I know what you're thinking. You're thinking, well, geez, I've never heard the words IRA and taxes in the same sentence. And you're not totally wrong, because IRAs and 401ks, HSAs and ESAs, they're all tax-exempt entities in the sense that they do completely eliminate capital gains tax and allow you to invest and get the power of compounding interest, going a little bit more aggressively than making those same type of investments outside of a tax-sheltered investment vehicle. So when you have investments inside of those accounts that trigger taxation, well, obviously it's not something that you want to hear, but it's something to be aware of and not scared of. So specifically what we're talking about today is unrelated business income tax. And that's really not the only acronym that we're dealing with, UBIT. There's actually UBTI, UDFI, and UBIT, like I mentioned already. And to break all these down for you, UBTI is unrelated business taxable income. It's a type of income that's generated by a business that's taxable. Unrelated business income tax is the tax that's generated because of the business income. And UDFI, well, that's just a type of UBTI. It's a type of income that, in the eyes of the IRS, is taxable if it applies to certain IRA investments. So they all work kind of hand in hand, but the important thing to remember is that there's certain income that can be generated from an IRA's investments that could be taxable. The IRS looks at tax-sheltered investment vehicles like IRAs and wants to level the playing field should that tax-sheltered entity either operate a business or bring in leverage, bring in outside money from that tax shelter to do its investing. So there's two different ways, I suppose, that your IRA could become a taxpayer. Number one, is if your IRA owns an operating business, and the reason why the business income from that investment might be taxed is because the IRS looks at a situation like that and they say, somebody could be operating a hamburger shop inside of an IRA right across the street from a McDonald's and undercut them till the cows come home. So the number one reason why that type of income might be taxed inside of an IRA is simply to level the playing field. The second reason that an IRA might become a taxpayer and have UDFI, unrelated debt financed income, and thus unrelated debt financed income tax, is if the IRA owner brings in outside money from outside of their tax shelter, and uses it to increase their buying power, thus making their investments debt leveraged. Now the IRS, again, looks at a situation like that and they say, well, those dollars that you brought in to help make that investment, they weren't inside your tax shelter. You didn't contribute those dollars per the contribution limits year over year. So since those dollars exist outside of a tax shelter, a portion of the income generated or the proceeds from the sale of that investment will be taxable. And what that looks like very specifically in those types of situations, say you're using a loan to purchase a rental property, whatever your debt financed percentage of the investment is, that same percentage gets applied to the income generated or the proceeds from sale. And that percentage of the income or the proceeds from the sale are taxable. So it's not like all of your rental income or all of your proceeds from sale of your investment are going to get taxed. It's just your debt financed percentage. So while your IRA does become a taxpayer in some situations, just know that there is some silver lining. You could very likely use some write-offs now that your IRA has become a taxpayer. And in the case of bringing in outside money, using that debt leverage to finance an investment purchase, also know that if it's something like a rental property where you're able to pay that loan down a little bit each month, I'm sure you understand, as you get that loan financed percentage down, that tax that you're responsible for or that your IRA is responsible for gets smaller and smaller as that loan gets paid down as well. So how do you figure out if your investment type might trigger UBTI, UDFI in the case of leverage using a loan? You know, at Nuview, we're not tax professionals, unfortunately. This is a topic that comes up a lot with self-directed IRAs, so we are definitely well equipped to let you know what you might be looking at. But when it comes down to your specific numbers, and you know, if you're wondering if a specific structure to an investment might trigger this type of taxation, we're a good first resource, but we always recommend talking to a CPA. We also did a really great webinar in recent months with CPA Adam Barr, and he went into such great detail on this topic, and it's really needed because it's not, again, something that people know about. They don't expect IRA and taxes to be in the same sentence. So we definitely encourage you to go check out that webinar. You know, it talks about everything I just covered, but a lot more in depth, right? And at the same time, Adam Barr, he's also a good resource if you do have an investment, have a self-directed IRA that could trigger this type of taxation. They'll be able to help you figure out what that tax responsibility is and how to pay it. So like I said, at Nuview, we're not the tax advisors, investment advisors, financial advisors. So when it comes down to your specific situation, we always recommend speaking to a CPA. If you want to learn a little bit more about UBIT, UDFI, UBTI, like I said, all different acronyms, they're all related to each other. Definitely give us a call. We'll be able to give you at least as much information as we're able to. And then we'd also point you to that webinar that we did recently with Adam Barr, CPA. And otherwise, I appreciate you guys hanging out for a little bit more of the complicated topics in the IRA world, but it's a good one to know because there's a lot of investments out there and a lot of opportunity. And having a good foundational knowledge of how to use leverage, how to navigate what happens when your IRA becomes a taxpayer can be a very powerful tool for all you self-directed IRA investors out there. So once again, my name is Alex Sylvia. Appreciate you guys hanging out with me today, and we'll see you next time for Nuview's next IRA Quick Tip.